Hello there! In today's episode we are going to have a look at Asseco South Eastern Europe, or in short, Asseco SEE. Asseco SEE is one of the three companies from Asseco International Group that are listed on Warsaw Stock Exchange, with the other two being Asseco Poland and Asseco Business Solutions. All three are known to Polish investors as predictable, conservative IT dividend companies. If you are interested in Asseco Group as a whole or in Asseco Poland, I've shortly talked about them in my other video, about Polish stocks that earn globally. You should find a link somewhere on the screen right now. But today we will focus on Asseco SEE, which arguably might be the best investment out of these three. But first, please make sure to like the video, hit the subscribe button and leave some comment. It boosts my motivation a lot and it helps me to reach broader audience. Also, if you would like to follow more frequent updates on Polish stocks, I've just started a Twitter or X account, you can find the link in description. Feel free to follow. Alrighty, coming back to Asseco SEE. The Southeastern Europe is a bit misleading, as the company operates not only in SEE region, but also in Turkey, Egypt, Spain, Portugal, and a few countries in Central and South America. The main segments they focus on are the first one, banking software solutions and services, such as omnichannel solutions, integrated core banking systems, authentication and security software, reporting, risk management, and so on. The second one being payment industry, under the Payten brand supporting e-commerce, mobile payments, payment processing as well as ATMs and point-of-sale terminal software. And third, the last broad category is dedicated solutions for various companies from financial, industrial, public administration or telecom and utility sectors. What's worth noticing, they claim that 10 out of the 15 largest banks in Southeastern Europe are clients of Asseco SEE. In total, they cooperate with 45 finance institutions and over 110 public and utility companies. So, from this perspective, they look well diversified across different countries, multiple clients, and various sectors. Let's quickly browse through their latest Q3 financial results report. To understand better what they are doing, we can read about their best deals per each segment. In the banking unit, they highlight a few projects like mobile channel integration for a large-sized bank in Romania, SaaS project for a bank in Montenegro, implementation of their products into a few banks with migration of users to a new system in Serbia, Croatia, Slovakia, instant payments module for a bank in Romania, and a few other projects in other countries. So indeed, they are present in the whole Balkans. In a dedicated solutions unit as well, they've been supporting financial and administrative institutions, mainly in the Balkans area in countries like Croatia and Turkey. And regarding payment units, they actually split this into a few categories like e-commerce processing and ATMs and point of sales. So here as well we can see various software from payment integrations in a bank to ticketing platform or providing payment solutions for oil and gas industry. Revenue-wise, Payment Solutions is the biggest business unit, making for 46% of revenue. Dedicated Solutions is the second one, with 35% of revenues, and Banking contributes with 19%. Banking and payment units are far more profitable than Dedicated Solutions, so it would be best for them to keep the payments and banking as dominant part of their operations range. Diving deeper into the biggest unit, Payments, 50% of revenue comes from operating point-of-sales terminals, 27% from ATMs, 16% from e-commerce and 7% from processing. I think a good trend here is that while point of sales and ATMs segments decline, e-commerce and processing rapidly grow, which are arguably more future resilient businesses. Here we can see the revenue split by countries. The biggest contributor was Serbia, the second one being Romania, and the third Croatia. But overall, I would say the revenue is nicely distributed across the whole Balkans. Latin America makes so far only 2% of the revenue, and Iberia 6.5%. Overall, a digitalization of administrative and financial institutions is an ongoing process. Asseco South Eastern Europe has a very strong position in this region, and if we look at some digitalization index score, it looks like the countries in this area still have a lot of improvements to be done. So that's a lot of potential money to make by Asseco SEE, and I can't really think of any reason that would stop the demand for such services. Now let's talk about financials and the balance sheet. Guru Focus gives Asseco SEE a very high score of 95 out of 100 points. Let's understand why. As we can see on those charts, revenue is going very nicely with a visible acceleration around 2018, and from this time it's just speeding upside. The bottom line, the net income looks really well as well. It was more or less flat at the beginning, but from 2018 it also started to accelerate a lot. They've been growing cash flow consistently, and although recently took on a bit more debt than usually, they still keep more cash on hand than debt. What I really love to see here is that ROIC, return on capital invested ratio, is growing as well, and now is sitting around 13%. Their business is very profitable, all the margins are high as well and all move in a positive trend. If we check the annualized growth rates per share, we can see a very good results here too. During last 10 years, revenue grew annually almost 13% per share, earnings grew 17% per share, and free cash flow per share grew massive 36%. And on top of that, the dividend growing 10% yearly, but we will discuss dividends in a moment. Had you bought Asseco SEE 10 years ago, your total return today would be around 490%. As we can see here, Asseco SE massively outperformed broad market indexes as well as Asseco Business Solutions and Asseco Poland. Now let's talk about the most important thing for me as a dividend investor. The current dividend yield is sitting around 3.09%, which seems pretty good comparing to American dividend aristocrats, but is rather low for Polish dividend payers. But the current dividend ratio is sitting around nice 40%, which I think is near optimal value, and the 5-year growth rate is about 23%, which is great. And as we have seen before, it accelerated recently, and the 10 years average growth rate is around 10%, which still is a decent number. If you bought Asseco SE 5 years ago, it would be now yielding you a nice dividend of 8.7%. They've been paying dividend consistently since 2010. There was one dividend cut, but it happened just after a big spike, so I think it's acceptable. Be aware that dividend culture is not so mature in Poland, as for example in the US. It's changing, and now companies care more and more to pay dividend and do their best to keep it growing every year. Anyway, it looks like earnings per share and free cash flow per share grow even faster than dividend. So it seems that they might keep up with this very high growth rate of their dividend for some time. And the management has officially stated a dividend policy. They will recommend payment of dividend in the amount equivalent to 30 to 50% of the consolidated profit of the company. However, this amount might be reduced when the company makes significant investments, but as we have seen before, so far it didn't happen. Now, let's check if current valuation is attractive. Current dividend yield is more or less in line with long-term average, but it's the highest since 2020. Current PE ratio sits around 12.36 and PEG ratios around 0.37, which seem very attractive. Guru Focus estimates the fair value to be around 87 zlotys based on DCF method, which gives us a big 30% margin of safety and suggests a strong undervaluation. On Peter Lynch chart, the current price sits under the Peter Lynch earnings line, which is another sign of undervaluation. And finally, let's check the Guru Focus value. It's based on historical multiples of price to earnings, sales, book value and free cash flow that stock has traded at, adjusted with past returns and growth and future estimates. Here too the price is below the line. So, having all this in mind, I think that Asseco SE is a great, well-diversified company with fantastic growth over last years and still good future prospects. They have a very strong balance sheet, the dividend is safe, and its growth rate might keep up its pace. I believe it's the best out of 3 Asseco Group companies listed on Warsaw Stock Exchange and should be one of the first companies to consider if you invest in Polish market. Current valuation, though near its all-time heights, still seem attractive and all the methods we checked suggest some undervaluation. However, be informed that I own Asseco SE shares and I might be biased. That's it regarding Asseco South Eastern Europe. Don't forget to like, subscribe and leave a comment what you think about Asseco. Cheers! Remember that I am not a financial advisor nor an economist. The content is strictly educational and informational. You should do your own research and only you are responsible for your own financial choices.